Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar has no illusions, stock indices are ready to sell the facts, gold is looking up, and Bitcoin is losing the competition to Ether. The US dollar has entered a period of consolidation. Pressure on the USD index is being exerted by the increased likelihood of a Fed rate cut in September, from 69% to 87%. Following Jerome Powell's dovish rhetoric in Jackson Hole and the White House's intention to pursue fiscal dominance. Instead of reducing the budget deficit by cutting government spending and raising taxes, a different approach is being taken. Donald Trump and his team are pushing the Fed to cut rates. For the first time in the central bank's 111-year history, the president has dismissed a member of the FOMC. The U.S. administration is exploring the possibility of replacing the heads of the Federal Reserve banks. The main task is to change the composition of the committee and ensure aggressive monetary policy easing. When other central banks maintain rates, this should lead to a severe weakening of the US dollar. The problems of its competitors hamper the fall of the USD index. The Dutch government survived a vote of no confidence, but the French government is unlikely to do so in September. The increase in political risks threatens to widen the yield spread between French and German bonds to its highest level since 2012, preventing the EURUSD from returning to an upward trend. The S&P 500 set another record high in anticipation of strong corporate reporting from NVIDIA. Earnings and expected revenue pleased investors, but sales in the important data processing segment were disappointing. So was the news that the H20 AI chip was not being sold to customers in China. As a result, quarterly revenue fell by $4 billion. Excessively high expectations were not met, and we are seeing another example of buying rumors, selling facts. NVIDIA's earnings report is extremely important for investors. Not only is it the most expensive company in the world, but its share in the S&P 500 is 8%, a historic record. The tech giant is the market leader in artificial intelligence. This factor was behind the broad stock index rally in 2022 to 2025. There is an opinion that, for the most part, it is already reflected in the quotes. The correction is unlikely to be deep. Investors are not going to leave the market. They are diversifying their portfolios in favor of other S&P 500 sectors. The strong U.S. economy and the Fed's readiness to cut rates are creating a tailwind for equities. This is especially true for small-cap companies. Over the week, the Russell 2000 gained 6.4%, almost 3 times more than the S&P 500. Gold quickly recovered thanks to Jerome Powell's signals about a rate cut, unprecedented pressure from the White House on the Fed, and the continuing high level of geopolitical risks. Washington's introduction of 50% tariffs against India risks further deepening the divide between the West and the East, as well as the associated processes of de-dollarization and diversification of gold and foreign exchange reserves by central banks in favor of precious metals. Gold bulls are drawing strength from expectations of Fed rate cuts and the dynamics of the U.S. yield curve. Rates on 30-year Treasury bonds are rising. This indicates expectations of accelerating inflation. Yields on 2- and 10-year Treasuries are falling. The market is painting a background of stagflation, which is the best food for gold bugs. Bitcoin managed to rebound from 7-week lows thanks to new records set by the S&P 500 and improved global risk appetite. The leader of the cryptocurrency sector is losing ground to the second-largest digital asset by market capitalization, Ethereum. This is due to a decline in Bitcoin's volatility. It is now perceived as a less risky asset than before. In August, Bitcoin-focused exchange-traded funds faced an outflow of capital of about $1 billion. During the same period, Ether ETFs attracted $3.3 billion. The annual volatility of BTC-USD fell to an unprecedented 38%. About 10 years ago, it was around 200%. The leader of the cryptocurrency sector is transforming from a high-risk asset into a traditional one. Other cryptocurrencies are taking their place. Thanks to the active promotion of stablecoins on the popular Ethereum blockchain, its native token, Ether, is attracting increasing attention. At the same time, the derivatives market is signaling bearish sentiment towards digital assets. If U.S. stock indices undergo a correction, both Bitcoin and Ether will come under pressure. The key event of the first week of September will be the August U.S. labor market report. Disappointing statistics for May July led to a dovish shift by the Fed. If the data continues to deteriorate, the Fed may cut rates more than once before the end of 2025. Employment dynamics are influenced not only by Donald Trump's anti-immigration policy, but also by Elon Musk's Department of Efficiency's mass layoffs of civil servants. Until recently, civil servants who were laid off were considered employed. Significant adjustments should be expected by autumn. Trading Economics expects non-farm employment to grow by 50,000. This will be another blow to the US dollar. Statistics on business activity from the Institute for Supply Management will give an idea of the state of the US economy. At the beginning of the week, pay attention to estimates of European inflation in August. Many believe that the ECB has ended its cycle of monetary policy easing. Consumer prices will help us understand whether this is true or not. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.